promise you, you're gonna become profitable, bro. I can already see it, my dog. You're gonna become profitable. But anyways, today's a very important lesson, so congratulations. I'm very happy that you made it this far. We're gonna speak about liquidity and liquidity sweep. Super important, so you would have to rewatch this video multiple times to understand it, but I'm gonna explain it as simple as possible. Now, I'm gonna repeat myself 1,000 times in each video. This is not 100% of my strategy. This is only 10 to 15%. Although it is 10 to 15%, it is still super important. If you want to learn 100% of my strategy personally taught by me, again, everything is in my website, shotradinganalysis.com, or you can DM me on Discord. Now, I'm gonna switch the cam. Let's get right into it. Today's gonna be a crazy ass lesson, dog. Ha! Liquidity sweep and liquidity, man. I want you guys to pause this video and write down your notes. And if you do not understand this lesson, please go back to it multiple times, because I will be explaining this lesson as simplest and easiest as I can. Now, in an uptrend, the highest high is what you call liquidity, and in a downtrend, the lowest low is liquidity. Liquidity is unswept. Keyword, unswept. Now, in an uptrend, the second highest high to the left side is liquidity sweep. And in a downtrend, the second lowest low to the left side is liquidity sweep. Liquidity and liquidity sweep is either the red or green wick, whatever is the lowest or highest. We only look at liquidity and liquidity sweep trading against the trend. Now, I have two types of strategy, trading against the trend and trading within the trend. Right now, we're going to speak a little bit about trading against the trend. When liquidity is swept, you must wait for a 1 hour break of structure to take a trade. We do not look at the 15-minute, the 4-hour, or 5-minute, only the 1 hour break of structure. Very important, we look at external liquidity on the hourly time frame and internal liquidity on the 15-minute time frame, which I will speak about in a few. And if market goes up, we go down. And if market goes down, we go up, because remember, we're trading against the trend. Now, this right over here is a what trend? It's an uptrend. If market goes up, we are going down. Now, in an uptrend, the highest high is what you call liquidity. The second highest high to the left side is what you call liquidity sweep. So this right over here is a liquidity sweep. This is a liquidity sweep, but this is the one that we look at because this is the second highest high. Now, we need a 1 hour break of structure going down to enter a trade. Now, is this the hourly break of structure right over here? If you watch last video, candlestick confirmation and break of structure means the same exact thing. So this right over here is not candlestick confirmation, because let's say this is a green candle right over here going up, and let's say this is a red candle. The red candle body did not close below this green wick, so this is not confirmation. This is not a break of structure. The market is going to go down. Many traders, they're impatient. They have no discipline. They end up taking a trade because they see this little move going down. I'm going to take a trade going down right over here when there is no confirmation. And what ends up happening is they get stopped out. Okay? Now, boom, stopped out. Now, the difference between liquidity and liquidity sweep, if you look in front of liquidity, there is no candle, no wick, no body. Nothing is above this high right over here. It's unswept. Very important, unswept. But if you look in front of liquidity sweep, the candle, body, wick, whatever it is above this high, and it's been swept. Okay, now what ended up happening is when they took this trade, they lost. And liquidity has been what, guys? For the ones that said swept, correct, liquidity has been swept. So now this right over here is the liquidity sweep. This was once liquidity, but now it's not because it's swept. Now, what is this right over here? The highest high, what is that called? For the ones that said liquidity, yes, it's unswept. This is liquidity. Now, all we need right now is a hourly break of structure going down. Is this an hourly break of structure going down right here? For the ones that said, yes, this is a break of structure. Now, this is where we would enter our trade. Keep this in mind. This is not how I usually take a trade. I probably use this once a week or twice a week. But, for you guys, you can, potentially take a trade like this. But yes, we take a trade right over here. Now we have a stop loss and a take profit. What does this mean? A stop loss, this gray box that you see, is a security on our account where, for example, we place it to a zone we're comfortable with and we lose a certain amount that, we can lose. All right. Now, if price goes all the way up right over here, we're not losing all this money. No, we're only losing what's in this gray box right over here. Now, our take profit, the reason why I have it is because I don't like looking at the screen all day. I place it to a zone where market is going to go, and I literally walk off, do whatever I have to do, and as soon as market comes out this blue box, I automatically win this trade. It takes me out. All right. Now we don't just place this stop loss and take profit anywhere. No, we place it to a zone where market is going to go down to, or we're protected where it won't go up to. All right. So for example, our stop loss would be at liquidity. Okay, and our take profit would be at something called liquidity 1, liquidity 2, liquidity 2.5. Liquidity is not just the highest high or the lowest low, it's unswept. Keyword unswept. So we place it to something called TP1, TP2, TP2.5, liquidity 1, 2, and 2.5. So it'll be these lows that you see right here: TP1, 2, 2.5. Why? Because keep this in mind, it's unswept. There is no candle that's coming back to these lows. You see what I'm saying? It's unswept. So what market does is, like a pattern, TP has been hit. Market's in a downtrend now. And what do? Liquidity has been swept. Liquidity at the lowest low. Break of structure going up. And liquidity is like a magnet to price. What it does is it comes back to this high right over here and does the same exact thing. Liquidity sweep. Liquidity, break of structure, right back down. Make sense, guys? Now I'm going to show you live markets, and it's going to make way more sense. What I want you to do is I don't want you to zoom all the way out and mark out this big ass uptrend, nor do I want you to zoom in and mark out this little ass uptrend right over here. I want you guys to mark out the whole entire thing, okay, and find that reversal going down. Now in an uptrend, the highest high, it doesn't matter what wick it is, guys. It's whatever is the highest wick. It can be the red wick, green wick, black wick, or blue wick. It's the highest wick. That is what you call liquidity, because again, it's unswept. There's no candle above this high. I got something in my eye. There's no candle above this high. And this right over here, technically sure, is a liquidity sweep because it is the second highest high, but this is not the one that we look at. Very important. Not the one that we look at. And the reason why is because let's say there is another high right over here that's higher than this. We will use this. Okay? Now, the lines can be close to each other. You see how the black line, liquidity line, the liquidity sweep line are very close? That's totally fine. That can be close to each other. But what's not okay, guys? The liquidity sweep candle body and the liquidity candle body cannot be close to each other. The lines can be close to each other, not a problem, but the bodies cannot be close to each other. So in this case, we will use this right over here as liquidity sweep, or better yet, keep this in mind, guys, very important. The liquidity sweep does not need to be in the same trend. You can zoom all the way out and literally use this as your liquidity sweep all the way back here. But for right now, let's make it easy. Let's use this as your liquidity sweep, okay? The second highest high, again, doesn't matter what wick it is. This black wick, swept, liquidity sweep, and the highest high, unswept liquidity. Now, all we need is a 1 hour break of structure going down. Now, remember, a break of structure is candlestick confirmation, okay? So now, the black body closed below this blue wick. Is this a break of structure going down, guys? What do you guys think? For the ones that said yes, this is a break of structure going down because the black body did close below that blue wick. Okay, and that's where we would enter our trade. Now, what I want you guys to do is take a yellow line. I want you guys to take a screenshot of this right over here. Oh my God. And BOS yellow line. Okay, take a screenshot of this right over here. And this is exactly how I want you to do homework. Focus on 3 lines, okay? Do it, obviously, back test it, and live test it as well. Take a screenshot. Black liquidity, liquidity sweep, and the hourly break of structure where we enter our trade right over here. Stop loss at liquidity. And remember, our take profit is not TP1, 2, 2.5. It's not just these candles. We don't place it all the way down here. No. It's TP1, this low, TP2, this low, TP2.5, this low. And this is our trade right over here. And just like that, look what market does. Come on now. We just made some money, guys. You see? Very simple. Now, let's do this one right over here. If market's in a downtrend, this is going to be all you guys. If market's in a downtrend, where is liquidity? Is at the lowest low. If you said the lowest low, you're correct. Because remember, if the highest high and an uptrend is the highest high and the second highest high is the uptrend, what is the, oh my God. If an uptrend, the highest high is liquidity and the second highest high is liquidity sweep, in a downtrend, the lowest low and the second lowest low is liquidity sweep and liquidity as well. So in this case, the lowest low is what you call liquidity, And the second lowest low to the left side would be liquidity sweep. If you guys think this is way too close, that's totally fine. What you can do is you can zoom all the way out and you can use all this back over here. Okay? Do not be afraid to zoom out. You can use all that back over here. And now we be patient and wait for a break of structure. Now, we look at the black candlestick top wick. Did the blue body close above this black wick right over here? Yes, it did. So this right over here is a break of structure where we enter our trade. Stop loss at liquidity and then TP1. Stop loss at liquidity and then we have TP1, 2, 2.5. And just like that, look what market does, guys. TP has been hit. We just made some money. Make sense? Very important, guys. Okay. Now this right over here is what you call liquidity and liquidity sweep. Now we're going to do one more. Literally one more, just so I know that you got it. This is going to be all you, okay? If you get this wrong right over here, then I would recommend you to, rewatch the video. In an uptrend, where are we going? Reversal. Right back down. Correct. Now, the highest high is what wick? Where is it at? If you set the blue wick right over here, congratulations. This is the highest high. This is what you call what? What's the word? What is this called right over here? Liquidity. Good job. It's unswept. Now, the second highest high to the left side is liquidity sweep. What candle is that? If you said this one right over here, yes, you are correct. If you said this one right over here or any of these right over here, you're not wrong. This is just way too close. And if you said these, you're not technically wrong. It is liquidity sweep. But remember, these are not the second highest high. It's this one right over here. Now, do we have an hourly break of structure going down? If so, where? Keep this in mind. We look at the most recent blue candlestick bottom wick. This is the most recent. The black candle body closes below it. Now, this is the break of structure that we look for. And just like that, we enter the trade right over here going down. Stop loss at this candle high. And TP1, 2, 2.5. You can scale down a little lower right over here. And just like that, look what market does. Come on now. TP has been hit. And that is what you call liquidity and liquidity sweep. Now I'm going to speak about external highs, external liquidity, and internal liquidity. Okay, so external and internal liquidity and liquidity sweep is very important if you want to take daily trades. And I'm going to explain this as thoroughly as possible. Okay, I'm excited. Now let me find a good zone to find it at. Okay, right over here. If market is in a uptrend, where are we going? We're going down, right? Many traders, they look at these internal highs being swept. We got an hourly break of structure. Yo, Sha, what the fuck, man? Why is the market not going all the way down, bro? Why? This is an internal high, bro. This is not super important. You can take small trades going down, but not a big trade going down. Why would market go down all the way because of swept as little as high? Because we have all these highs that needs to be swept. Liquidity is like a magnet to price. Very important. We have all these highs that needs to be swept. What makes you think that market, just because of swept this little high right here, is going to go all the way down? It doesn't make sense. We got an internal liquidity sweep. We got a break of structure. If you want to take a small trade, you definitely can. Look, this is on the 5-minute time frame. You at least need 10 to 15 points to make good money. This is 98 points right over here. And that's why we use internal liquidity sweep and liquidity for like these daily trades, okay? Now, the big move is when you call external highs and lows. So for example, instead of looking at this right over here and expecting market to come all the way down, we look at, again, these highs right over here. So what did price do? It swept liquidity. You see, it kept on going up till it swept external highs, broke structure. Where did market go? Right back down. We got a liquidity sweep right over here. We got a break of structure going up right here. Yo, Sha, what the fuck, man? Why is the market going all the way up, bro? What the hell, bro? Because, again, this is internal lows, bro. You want to look at these highs right over here. Oh, sorry, these lows right over here for that move going right back up. And what did market do? It swept liquidity, external lows. It broke structure. Where did market go? Right back up. Look, internal. Look, you could have gotten a small trade going right back down. And then if you want the overall move going down to sweep these lows or whatever it is, this high or this high right here, what did market do? Swept. Went down. What did market do? External again. Swept. Went right back up. What did market do? External again. Swept. You see what I'm saying? It's like a pattern. And if I zoom out, I'm going to show you how this pattern works. Liquidity C, break restructure, market goes up. Liquidity C, break restructure, market goes down. Liquidity C, break restructure, market goes up. Liquidity C, break restructure, market goes down. Liquidity C, break restructure, market goes up. Liquidity C, break restructure, market goes down. Liquidity C, break restructure, market goes up. And it's you see the pattern? That's external highs. And if you want to take small trades, you can take small trades using the internal highs. Does that make sense? And that's what you call liquidity and liquidity sweep. So for example, right now, this is live markets. If you zoom out, look, we have all these external liquidities that needs to be filled for the overall move going down. But then for internal, we have this high right over here that can be swept for a small trade going right back down. And let me switch the camera. All right, that being said, I explained liquidity and liquidity sweep as simple and easy as I can. If you do understand, I'm very proud of you. And yeah, I'm going to see you guys for next lesson. And yo, bro, you're going to be a profitable day trader, but just believe in yourself, keep taking notes, keep practicing, stay consistent, and let's get this shit going, man.